Hey everyone, Jeff Dorman, CIO of Arca, back again for another edition of That's Our Two Satoshis Live, where we talk about everything happening in the digital asset marketplace. And this week I'm joined by my colleague Michal Benedykcinski, who is traditionally focused on more of the private investments here at Arca, but dabbles in the liquid stuff as well. But Michal, thanks for joining.
Thank you so much for having me.
So before we get started here, Michal just attended ETH Denver. We're going to spend the most of the time here talking about what happened at the conference and some broader takeaways. But before we get into it, as always, even though this is not investment advice, we are going to talk about what's happening in the markets. And I think it's safe to say that this has been one of the craziest 8 weeks ever in terms of news flow and jawboning and headlines, but obviously terrible in terms of price action. But I thought what was interesting last week was essentially a crypto bailout, for lack of a better word. Trump announcing that there was going to be a strategic reserve, but it wasn't going to just be Bitcoin like everyone thought. It was going to contain Cardano and Solana and Ripple and Ethereum. And, look, make no mistake about it. There's not a lot of institutional investors who have a lot of great things to say about Ripple and Cardano, simply because there's just not a lot actually happening on those blockchains and no real data or tangible reason to invest in them. But you can't dismiss the fact that these are huge retail tokens and certainly big market caps. It's going to be interesting to see what ultimately ends up in this strategic reserve. I think in some way, shape, or form, if you're a smart contract platform, it really doesn't matter what success you've had to date. The fact of the matter is, if a blockchain is nothing more than a way to transact in digital assets, 99% of the world's assets are not on blockchain yet. So it doesn't really matter if Ethereum or Solana has a lead over a Cardano or anything else right now. Ultimately, if the US government becomes the biggest user and customer of blockchains, whichever blockchain they use is what's going to matter. And I think the same is true of JP Morgan and Walmart and Starbucks and Disney and every other big company and entity out there. Is, we don't know which blockchains are going to win. Ultimately, because we haven't seen any real usage yet outside of these kind of crypto experiments. So it did feel a little bit like a crypto bailout when that announcement came out, similar to what we saw in 2008 and 2020, and again in March of 2023. And I don't even mean that in a bad way. I mean it in the sense of, digital assets have never had a buyer of last resort, right? It has always been just an asset class that has kind of succeeded and failed on its own without ever having a backstop. And I think a big reason for the persistent high volatility of this asset class is because of not having that buyer of last resort. And now potentially that we start to price in the fact that the U.S. government and other governments around the world might actually be that buyer of last resort in some way, shape, or form. No different than Mario Draghi at the ECB in 2012 when he came out with his famous whatever it takes speech, where ultimately they didn't even put any money into the market. They just supported prices by promising action that never even really materialized. So I think it was kind of a bailout, and I think it's a good thing in the sense that it could restore some confidence and maybe put a floor on prices here that have obviously been down only now for 8 weeks. So with that in mind, we'll see what happens next week with prices and obviously some whipsaw price action right now. Hard to trade, easy to kind of just set it and forget it and look up 12 months from now, because there's really nothing but positive things happening in the crypto world, but certainly negative from a price action. So ignore it, turn your computer off, buy the stuff you like, hold on to it, and don't do anything for 6 months and see where you are. But more importantly, as I promised, Michal, you just got back from Denver. A lot of things happening at ETH Denver, not even necessarily related to Ethereum anymore. This is sort of just a broader crypto conference now that's still going by the name of ETH Denver. So why don't you tell folks what you saw, what was interesting, any themes, takeaways from your time down there?
Absolutely. And this is my 5th edition of this conference I was able to attend with just a brief intermission that was hosted in a metaverse during the COVID lockdown in 2020. So we have seen ultimately this event evolve far beyond just Ethereum and even EVM-centric type of event. So Ethereum virtual machine, of course, still at the center stage. But the way this event has been run this year and 2 prior editions is that outside of the main event, you also have hundreds and hundreds of side events, each of them congregating around different thematic buckets. This year, some of the most popular ones, certainly on the AI front, so kind of the convergence between AI and crypto that we have kind of covered a lot in our writing and also kind of the extensive coverage as far as research team. But increasingly, some of the other themes that started rearing their head and hosting exclusive events dedicated to those were decentralized physical infrastructure. So really big, deep in presence. You could quite literally go the entire week only attending deep in centric events, which hasn't been kind of necessarily the case in years prior, where you could, yes, have one or two events, but not a full week of programming. And then third and final, but not least important, asset tokenizations and stablecoins. That one has been, by and large, one of the most popular among some of the traditional finance attendees that descended on Denver, but one that really kind of points to some of the avenues how this space will evolve in kind of the months to come. So this is perhaps...
Yeah. Now, was it mostly service providers trying to sell institutional investors on, whatever, custody research, staking type stuff? Was it more retail focused? Was it more specific investment focused? Or was it kind of like, Vegas tech conference with all kinds of future use cases that maybe aren't fully developed? Like, what was the vibe? What was the, main takeaways of what you saw that you got excited about?
I would certainly say that this event has grown to really embody this kind of big tent analogy, where ETH Denver as kind of the flagship event, really the largest in the Western Hemisphere, running now 8 years plus, is not only attracting and bringing the builders from across the Ethereum ecosystem, but also increasingly a lot of investors. With that, of course, all the service providers that are trying to ultimately maintain the relationships with the asset managers in the space, but also retail. I mean, we met many attendees that are not necessarily builders, not kind of investors, but are passionate about the space, some of the products. To me, that was certainly a case in point on how this event has outgrown its original purpose, which was exclusively developer focused. And so, thankfully, we did have quite a nice presence on the ground from our portfolio team. And each and every one of us kind of decided to pursue a slightly different track. Some decided to focus on some of our counterparties and kind of making sure that we're in good working relationships and potentially looking for some of the future partnerships. But others, like myself, primarily focus on the builders. This is where we get to see some of the earliest inklings of what is getting the developers excited in this space. And some of those themes really then translate to how we can invest and position our portfolio, both on the private as well as the liquid side. So this is where I have been primarily focused. And I would have to say that between these different demographics that were in attendance, builders and developers by far the most optimistic about kind of what the future holds. And some of the demos and the hacker houses that we've attended really point to incredibly exciting kind of nexus, especially on kind of some of the themes I wanted to focus on and examples.
When you're talking about the builders and developers, are these third time, fourth time developers, guys who've already created stuff? Is this a new wave of people coming into the space with fresh eyes?
And this is something that I try to kind of pinpoint that particular nuance in our two SaaS this week. The fact that this is probably one of the first conferences where I have seen a lot more new faces than in any prior editions. And by the new faces, I not only mean kind of fresh college graduates that are getting really into the smart contracting, but increasingly also a lot of the Web2 experienced veteran developers who are now just starting to dabble. And starting to code alongside. And so some of the hackathons that we participated in really were fantastic embodiment of kind of that spirit of bringing people from all walks of life and backgrounds to kind of hack away at some of the new cool applications. Probably a standout example for me where this excitement was totally palpable was the Base Hacker House. Where we have actually seen some of the very real-time demos of the products that are trying to leverage some of the latest infrastructure that Coinbase is bringing to bear, primarily the very nice and easy Coinbase wallet that will become almost like a window to interface with many of these applications on chain. So think of it as almost like a mini app store that will live on your mobile, where you'll be able to all of a sudden start transacting, start posting and socializing with some of the other users, all on chain, all kind of powered by really great, sleek applications, I have to say. I think the UX, UI, which has been bane of existence of anyone that has been experimenting and having fun on chain, this is, to me, I think, one of the incredible turning points where the applications and interface is getting a ton better. And I think that really shows with the type of demos we were able to see on the ground.
Anything that just sort of like you blew your socks off or blew your mind in terms of things that you tested or saw that, are maybe either 10 days out or 10 years out in terms of actually being a viable product?
Yeah, for sure. So some of the more futuristic, longer term, this was the first edition of the conference where we actually had robots on the ground, robots that were fairly simple and not overly sophisticated, but they were actually running and being integrated with some of the on-chain infrastructure. So just a great example, EigenLayer, one of the popular restaking protocols that is now also opening up its crypto rails to some of the inference runs, had a robot that was drawing sketches of individuals, interfacing with individuals, so having like a dialogue, and then ultimately able to mint some of that work on chain. Again, a toy today, but one where you can see with your imagination, a few months, years from now, could really start doing a lot more elaborate tasks on your behalf. Others perhaps in kind of the robot domain, GeoDNet, which is another project that is in a decentralized physical infrastructure bucket, that's doing a lot of the geospatial positioning. This is a direct data feed that goes into any cars, any delivery, logistics. They also brought a robot onto the ground. We put a picture in our newsletter that was actually leveraging some of that geopositioning data to walk the ground and kind of continue mapping and contributing to the network. So really, I would say toys today, but ones that give you a little bit of a glimpse into the future. And I fully expect a lot more automation to be present next year's edition.
Well, great. How was the tone given the market? Like, what do you think? What do you think this event would have been like had it happened 3 months ago rather than 3 days ago?
Yeah, I think it's particularly interesting because I think all the venues were certainly booked doing kind of the Trump rally that we've experienced. The booths were really creative and quite expensive, definitely more so than in years prior. But the mood has been mixed. So if you spoke to investors in this space, both long time as well as those that were just getting set up, I would say very cautious about kind of the future. Many of the venture funds peers that we have spoken and speak to historically have started to actually look at potentially getting more engaged in liquid investments, which historically maybe wasn't their forte or something they focused on. And then subsequently, I would say the mood has been very positive with many of the builders and kind of that next generation wave of incoming talent. They're continuing to kind of hack away, get incredible support from a lot of these layer ones and layer twos that have pretty significant budgets dedicated to kind of developer recruiting and development. So that will continue to be a rather healthy engine of this space. And probably, a lot more investors were a little bit beaten up by kind of the market volatility.
Great. Well, I think we're bumping up on time here. Michal, thanks for doing this, guys. For anybody who wants to read the full piece, Michal laid out a lot more detail in our write-up on our blog, ar.ca/blog, where you can read the full That's Our Two Satoshis. You can find Michal on Twitter and on Telegram or at our ARCA website to get more. But we'll be back again next week with more information about the digital assets market. And hang in there for those guys who are underwater. There are better times ahead. Thanks, everybody. We'll see you next week.
Thank you so much.